foreign lender Ecobank is coming to the end of a geographical expansion that saw the bank extend its reach into the East Africa Economic Community and beyond. The next phase will see the bank consolidating its operations to maximize partnerships and alliances. For more, Carina Kamel spoke to Albert Essien, Group Executive Director of Ecobank Corporate Bank.
The decision behind this strategy is to optimize our unrivaled footprint in Africa. We want to do so that we can serve our clients better. So it's more in response to the needs of our clients and the fact that we need to leverage this platform to serve our clients better.
Talk to me just a little bit about that strategy before we get into sort of more detail about it. Over the past few years, we've seen you expand. You're currently operating in 30 countries across Africa. You're in every country in the East African Economic Community. You have sought, through your expansion, to build partnerships and alliances like the one with Nedbank, for example, in South Africa, where there's a sharing, for example, of expertise and knowledge. It also gives you the advantage that you don't actually have to go ahead with an acquisition or potentially open actual branches for yourselves. Why have you decided to do that? Is it a sort of a low-cost method of expansion that you've seen? What are the advantages of having expanded in that way specifically?
Well, the advantage of expanding in that way is to make sure that we support our clients better. You know, we have an unrivaled footprint, and by stopping and looking at optimizing the platform, we will tend to leverage it to better serve our clients. So it's not a sort of a low-cost strategy, but we've reached a point where we need to optimize this platform.
Okay, so tell us a little bit about this strategy. So you're focusing on optimizing and making, you know, alliances and synergies between all these different units that you now own. How are you going to do that? Well,
the idea is to focus on the client now. Is to make sure that we use this platform.
But how do you mean? I mean, you say you're focusing on your client. What is your client telling you? What is it that you're trying to provide to your client? What is it that you can provide with all these different regional presences that you have?
Well, the regional presence gave us reach. Now we need to leverage on it. We need to look at the businesses that the clients actually need. That's why we've decided to have 3 main businesses underpinned by 2 support units. So we have a portfolio of domestic banks, that is the retail segment, that is purely the local business. We tend to have what we call the Ecobank capital, that encompasses the treasury, the investment bank, the asset management, and the research. Then this is actually supported by the corporate bank. Okay. The corporate bank would look at multinationals, regional corporates, international organizations, financial institutions, and governments, and government corporations. Okay. Then these 3 business units are underpinned by a disciplined finance and risk function and an efficient operations and technology platform. Okay, so you have 3 units now. Does that mean that you're going to see growth coming organically going forward as opposed to sort of acquisition or expansion-led growth? Where do you see growth coming from in the next phase? Growth will come from the expansion of the business. Okay? That is, if we focus better in delivering to our clients, not only will their businesses grow, so ours grow, but also by doing so, we intend to acquire more clients. Okay, the whole idea is to optimize, is to leverage what we have. However, having said that, we would look at opportunities that do come in terms of an acquisition. So you're not ruling out further acquisitions, is that what you're saying? We're not, but that is not the real focus now. There isn't that urgent need to go acquiring or to expand further. Okay, having said that, there are 3 countries that basically we started the process, so we think it's appropriate to complete the process. That is Angola, Zimbabwe, and Equatorial Guinea. So you're in the process of completing acquisitions in those countries at the moment? Either a fresh license or an acquisition. Okay, well, let's talk about your performance. In 2009, you had net profits of about $65 million. That was down slightly on the previous year, and you mentioned in your annual report that there were certain challenges that you were facing at the moment, specifically the difficult credit environment. Talk to us a little bit about, you know, the next fiscal year coming up. Do you expect those same challenges to remain? You know, what are your expectations currently? Are you thinking things will ease up? And how does that how are your future earnings potentially affected by this new strategy? Well, we have a very positive outlook. We think that we hit the bottom. We have to take certain measures to strengthen the bank. We had to make sure that we put behind us those legacy issues, more in some of our new subsidiaries, newly acquired subsidiaries, and also with the challenges that came up in Nigeria. But that is behind us. This year,
so you feel that the credit environment is improving and the challenges that you faced last year are no longer remaining? We
definitely think so. We've strengthened risk management. It's now a centralized function. We've improved expertise, both at the center, in the countries. It's an ongoing process. And we are really positive that this year we'll see better performance.